In today's video, we'll be having a look at, is the worst over for this dump, or are we going to be going lower? Well, if you're watching this later on today, you'll probably already have the answer for that. And it still looks heavy, right? Let's just be honest, it still looks heavy. I'll show you the levels that need to be cleared. I'll show you exactly what you want to see if you want to be bullish on the market again. Otherwise, bears are fully 100% in control, and they're grinding this thing down, even though the lower time frames as of right now are slightly up. If you look at that on the hourly, right, some of the coins bouncing over here, but the bears are very much in control. But there is still some hopium, and I'll show you what that looks like. Stay tuned till the very end. Help the algorithm out by smashing the like button over there. Give the video a like. Also, come and vote over there. Let me know your thoughts before I paint the picture and create the bias. You know, is the crypto bottom in? 37% of you are saying yes, there was the low, and that's going to hold. Fat chance, new lows incoming, 53% of you. And then the peanut gallery says other. You must let us know in the comments what your thoughts are over there. So let's get into it. There's a lot to discuss. I do want to go from the higher time frames and work our way down, just so that you get a bit of a broader overview and picture of where things are at, right? Has the structure broken on the very high time frames? How do things look? Where are things most likely to find support? Because there is dumping, but maybe you can call it bullish dumping. That depends on the time frame. Bullish dumping on the monthly, because you're coming into key supports, right? So first and foremost, I just want to expand this a little bit over here, and we have some key fib levels on, and you can see currently this monthly candle has hit exactly into that 0.618 fib at 94,236. Really, you can only confirm that the low's in when you start to close back above $100,000 on a high time frame. That would suggest you've reclaimed the 50% level. You came into key support. Remember, this is theoretical bullish demand in the yellow block, and that yellow block coincides with the 0.618. That's those two green lines. It's a Fibonacci retracement. And then if it gets really extreme, you could come down as low as about $80,000 to $85,000 into that 0.786 and 886 fib retracement. We see pullbacks into those deep fib retracements, but only in really extreme scenarios. Now, remember, this is looking at more of a local range. The local range has been pinned from that low to the all-time highs. When I say that low, I'm talking about where Bitcoin put in a major monthly low at $49,000. And essentially, we marking off those as pretty key levels. And you can see the structure as well in terms of the monthly low, high, low, and therefore if it gets really extreme, wicks coming down into this region, but closing higher up before the end of the month, we'll have our answer, right? So I basically say, when you want some insights into what the monthly chart is telling you, you're going to get those insights before this month closes in the next 15 days and 17 hours. Now, remember, Bitcoin bulls have a lot of work cut out for them to close the monthly in order to save and salvage the MACD, which is the moving average convergence, divergence, and momentum oscillator on the monthly scale, which is starting to roll over and cross towards the downside. We're already most likely getting the confirmation, almost 99% probability, that the 3-week MACD will be closing towards the downside, and that's going to have implications into the monthly. I mention this because if the monthly does close towards the downside, we've never seen us not go into a bear market off of that, just to be clear. That has a 100% hit rate. Monthly closes down, the top is in, and yes, there will be bounces along the way, but usually you go into a bear market. So what am I saying? Well, what I'm saying over here, when you look at the monthly scale, is if you do get a strong reaction out of here, you're probably still going to get that monthly close. But if that leads into a lower high, which is the more likely outcome, that becomes your complacency bounce on a higher time frame, and then you can look to I guess offload some of your spot, or maybe even consider some short trades over there for lower prices. So this is monthly demand. It is a bullish zone over there. We want to have a look at this quick highlight of the scale of what's going on over here. Weekly MACD still coming towards the downside. Those moving averages can really roll down, similar to what we saw back here. You can see there are times where you cross below that zero line, and this is still above the zero line, which means that theoretically, you know, the bears still have a lot of control. They are in a trend at the moment, and that trend is towards the downside right now. You've broken that weekly structure, and I think it's vitally important to actually consider what happened in the prior corrections. In the prior correction, when we came off of that high at $109,000 and we sold off and we went down as low as $74,000, price sold off 31.76%. Now, the reason you want to pay attention to these numbers is because If we supersede or extend beyond that on this sell-off, so if you keep correcting and we correct beyond that 31% mark, then you almost inevitably know what's coming next. The top is actually at that point in, and then you'll be looking for any bounce to be a lower high. However, there's still a chance that somehow bulls take magical control over here and get prices higher. But I wouldn't be stepping on that side of the, at least the coin, the bullish side, unless certain levels are reclaimed, which we'll talk about in a moment as I show you the daily charts, which are going to be the most important. So there it is, 2-week MACD still coming down, 3-week MACD, inevitably, this is going to cross. Like we have 1 day left, right? 1 day, 17 hours by Sunday, this is going to cross. And usually this has led to a lot of downside. You're coming off of bearish divergence, price putting in higher highs, triple bearish divergence, momentum oscillator putting in lower highs. That has always been a warning sign. And then there's your monthly MACD is crossing right now, but you got about 15 days left to defend that. I'll update you on Monday, or the whale remembers in the Discord already today, about the level that the monthly must get back above to avoid that cross, right? We'll talk about that. So wait until Monday if you're not already in the whale room Discord. Moving on, right? Lining this up with the weekly, very, very, very similar levels in terms of what I've just shown you on the monthly. So this is the level to fight for, is going to be that golden pocket. And, degen traders, high risk traders or investors will be looking to allocate into this, but scale into the position. Now, the way that you allocate into the market is going to be determined by your risk profile. It depends on how risky you are, right? If you're an incredibly aggressive trader or investor, basically, you could just pyramid in over here, and your expectation would be that price would hopefully bounce out of here. If you are very conservative, meaning you prefer safety, you prefer confirmation, well, you should not do this. You should wait, irrespective of price hitting this key level. Personally, I would encourage the majority of you to side on the safe side, right? I would go with a more conservative, cautious approach, just because of going back onto the monthly over here. I just want to highlight, if this were a 5-minute chart, when you start to see candles like that, these tweezer tops, right? I just want to go into that. When you start to see these tweezer tops, sometimes this can be very, very aggressive, right? So I wouldn't want to step in front of that, is all I'm saying. I'd rather wait for some sort of a confirmation, because there's a real chance that you are only over here. There you go. You're only over here. So you might get a little bit of a bounce, 2 weeks of upside, and then you continue to fall through. So that would look something like this. Price coming down, maybe tagging around that 80K region, bouncing up over here into 100K. Let me just get that back. Bouncing up into around 100K, which is going to flip into underside resistance. And then I could imagine how you're probably going to have, a head and shoulders pattern over there. Left shoulder, head, right shoulder, and then you're going to work your way down into a bear market. So that's the reality. That is the most likely outcome. Unfortunately, it just is what it is. We had a bull market. It lasted for 3 years, just like every other bull market. The timing cycle reached its end. And now we're in this position, right, where prices are coming down. We did speak about this a lot. We warned of it. We spoke about why things are looking very, very heavy. And you could have that 21 EMA rolling over. So for many out there, the conservatives in the space, they're going to wait for this weekly close at the minimum, and I would say that you should too. If somehow magically, remember, it requires a little bit of magical sprinkled bullish dust that you need to put on the charts over here. You have 1 day and 17 hours left to go. If they can rally this above $100,000, it's back on. It is literally back on. There's a possibility you could even take out the all-time highs. But if you close over here, it's very unlikely. And you need to look to other charts like the dailies to outline the confluent area. So first things first, 5-day time frame over here, we do have an area of confluence, which is coming in at that $88,000 region. And that is the, from current price, it's about 7.49% away. I may be willing to use a low time frame trigger plan like an hourly or 15-minute time frame chart as you approach that level, and actually go long over there if we do get there over the course of this weekend, because even hitting that level should still elicit a bit of a bounce. It's just, will that bounce lead into lower high? And then are you going to continue further down, right? So area of confluence, area of interest, 88,600. We did speak about that yesterday. You have your confirmation of expansion, similar level over here, coming into a little bit of an inefficiency candle, also known as a fair value gap, 88,000. So that is the next level to watch out for. Also, a little bit of, benefit for the bulls, I would say, is when the market typically gets into these really, really fearful states, which we're in right now, the 10 to 20s, look at the orange dots. This does elicit some pretty sizable bounces. So even if you compare this to June, July in 2021, where Bitcoin essentially dropped almost 50%, it rallied significantly after that back into new all-time highs off of that extreme fear. And we're getting the same read once again, right? So you're getting periods of extreme fear, which just tells you that timing-wise, you will get a relief bounce. It's coming, right? There will be a relief bounce. The relief bounce will be violent, aggressive. It will be super strong towards the upside. But I think that the weekly is going to be vitally important. If that relief bounce comes after a weekly close that looks like this, you know that the probabilities are very, very, very high that that is going to fail, right? So that is something to consider over there. Let's move on to this chart. What you do not want to see is this previous support flipping into resistance, which right now still seems like the most likely outcome, that today's candle will actually sell off and close red. And therefore, you might come down for some of those key levels like that 88K zone. So do pay attention to that. Keep all eyes on that. And I do want to remind you, we have two things going on over here. The first thing is you're inevitably going to get that death cross. Most people think the death cross is bullish and the golden cross is bearish. It is in the very short, immediate term, because it acts like a magnet where price can pull back into it. But I don't necessarily think that you're going to pull back into this one. I think this was that draw into it, right? This move here was the draw, and it didn't even make it as high as that. I think that this is going to act as resistance when you eventually run back into it. It's going to take a while to come back into it. It'll probably be like 2 to 3 weeks. But you do have Thursday as well, your bear moon that's going to print. So it's just as simple as level to level. Previously, we had the conservative level to take out, and we've just been riding this down throughout. So we can delete that now. And we then had this as the level to reclaim, and we can now ride that down further. And we can say, well, now this is the level to reclaim, because that is where your trend begins to shift. But not only that, even if you do get back above that $107,000 region, you're going to contend with the death cross, which is going to be a lot of resistance. There's going to be resistance there, guys. Do not be like an ostrich with your head in the sand. There's going to be resistance over there, and there's a lot of work to be done. Here's your clear and obvious horizontal SR flip. Resistance, resistance, resistance. Support throws it up. Support leads to new all-time highs, fails it. Resistance, resistance again, right? So if we even happen to get a bit of a relief rally into that death cross, it's still possible, but I think it's very unlikely. If you do get it, what you need to be looking out for is, hey, what is the volume doing into that rally? So as price begins to rise, if it's met with incredibly low green volume candles, that becomes a warning signal that this is just going to lead into another lower high and continue its journey towards the downside. And that's very simple, because that is trend trading. And right now, you've lost a very, very key level, which is coming in at that 108K level. You always ask yourself this when confused as a trader: hey, did I gain a level or lose a level? Well, you lost the level, you lost the level, you lost the level, you gained the level. Great, right? You gained the level. Great. You gained the level. New all-time highs. Wonderful. But there were warnings. When you gained that level and you ran to new all-time highs over here, what was the volume doing? It was very, very, very lackluster, very, very, very low. Now you have lost a level. That level has been lost. And that becomes the battle between the bulls and the bears. They are going to look to fight back and take control of $108,000 to get back above that. And right now, look at the volume candles over here. This is telling you trend in motion, right? Bears are in control, big selling coming into the market, but there is going to be support below. Firstly, remember, that's the one candle that we're looking at. This candle over here that occurred all the way back on the 22nd of April, 2025. So April this year, third week of April, big move up, consolidated, ripped up to new all-time highs. That's a bit of an inefficiency. You may come back and test some of that. So I'd be keeping an eye out on that. And it does line up with some of these other key zones, right? Like the parallel channel. What else do we have over there? We also had the 786 to 88 fib retracement, which we said does technically get tagged in extreme scenarios. those are confluence zones, areas of interest to watch out for. And then, of course, the next major support after that, if things get really bad, and what I'll do for you is I'll probably price label this just so that you have it and you know exactly where to look. So let's quickly do that. This is going to be one area price labeled for you. And then your next area over here, if things get really crazy, 73,000. So it won't happen in a straight line. Never does. It's not going to do this. That's not going to happen. There's going to be bounces, right? You're probably going to bounce over here, put in some relief. And if you do come down for that, that will maybe only be towards the end of the year. Okay. So one step at a time. What is your current next step, right? One foot in front of the other. What is your next step? The next step is that. Just assess what goes on over here, just below $90,000. Right now, you're in a little bit of no man's land, so there's nothing you can do at this current zone until you start to reclaim and shift things. So the first attempt at bounce over here on the daily, even if you were going for the reclaim, right? If you're going for the reclaim over here, it's probably not just going to do that, like super unlikely, right? You'd probably have to do this, come down, put in a bit of a high low, and it's going to take a little bit of time. So I think for right now, just chill out. Don't lose your money. That's it. Do not lose your money. Increase your education. Join a community of like-minded people that are studying the markets day in and day out and looking to succeed and educate yourself, right? One place you can do that in is, of course, in Whale Room, right? There's a big special happening. I'll tell you about that very soon, right? Okay, cool. So let's have a look over here at the liquidity. $24,093,700 on the downside, 25 million, a little bit higher on the upside. Unfortunately, when you look at the upside over here, it's not going to be enough to shift anything, right? Even if you come up into that 98K region, that all becomes massive underside resistance. Let's go back on this chart over here. So even if you come for that upper liquidity, what is this going to look like? It's just going to look like a bearish retest into what was previous support or resistance over there, support, and what happens if you come back and test that as resistance? That is where that 98K liquidity is situated. It's not enough to shift anything, to shift the structure or anything. So you have to treat that as a bearish retest until we have more candles that print to begin to shift things. And I just want to go back to this, and I want to remind you that, you know, the 3-week chart over here and the 4-week chart and things like that with these MACDs, this is an oil tanker. Once that oil tanker begins to turn, which it's done, there's no stopping it, right? Like it doesn't matter. It can spin that wheel all the way back to the other side to get that thing back up. It doesn't just happen, right? You need a monumental move to shift that oil tanker back up. The oil tanker has turned the corner, and that oil tanker is going right, or down, I should say. In this example, it's headed south, right? And nothing's going to stop that right now. So that is on the high time frame. Anything lower time frame, yeah, small bounces, things like that, it's all going to happen, right? I've tried to update you every day, every step of the way. Remember that, guys. We've gone through so many different things together. It's been years and years and years on this journey. One of the most recent things we spoke about was the downtrend forming over here. And I even said you could theoretically go short off of that trend line, right? There it was. That was now already coming up on Thursday, because we said this might drop price below $100,000. And there it is. I covered it on YouTube. We said, take the short trade. You know, we can't get back above the Monday low, rejection from there. You're looking for price to come down. And that's what happened over there. That show was done over there on November the 13th, as highlighted over here. So I think that we've done very, very well to protect ourselves, and it's all eyes on the USDT dominance. Don't lose sight of that. This is an important one. In terms of the measured move that kept us safe for all of this was the ascending triangle that began to form over here, right? Price putting in higher lows. There it is. Higher lows. Let's just grab that. There we go. Higher lows, but equal highs. Higher lows, but equal highs. We said that was likely to break out, and it's going to meet the measured move that came up at 5.868%, which is now more or less what we've got, right? We've hit that level. So you need more info now. And the next thing you want to look out for and be cautious of, if you're bullish in the market, that is that this doesn't break and hold above that level. Because if this breaks out and holds above that level, which currently the low time frame trend, which I'm just following over here simply on the 1-hour chart, has the moving average support, which is grinding that trend towards the upside. As you guys can see over here, higher highs and higher lows, higher highs and higher lows. So if you start to see this pressing up and grinding, it's probably going to find a lot of resistance at that measured move target. But remember, that effect of grinding into resistance technically does lead to explosive moves. And if that explodes up and flips this into support, so this is resistance, this should be resistance. But if it flips the USDT dominance level here at that 5.8 to 5.9% level into support, understand this, right? That is going to lead to a more explosive move towards the upside. And that's going to create a little bit more carnage in the market and most likely confirm that, at that point, you're breaking some of these super key levels down. And yeah, the oil tanker has turned, right? So be aware of that. Let's have a look at things over here on the Whale Trades website. Remember, this is linked in the description for you guys below. It's totally free to use. And it's there for you, right? All the tool set is there for you guys. So I did mention as well, I said what you're probably going to see leading into today, this is what I said yesterday, is that negative skew is going to disappear and the market's going to rebalance. But if price hasn't really bounced and is hanging around the lows, which it is on the daily, you can see over there, when that rebalancing takes place, well, that's not really a good sign. And in fact, the skew is even going positive, which shows you that there's a lot of longs that have tried to open up positions over here, but price is not following suit, hardly. And that's not a good sign, right? It increases the probability that this will fall through. So maybe you'll just consolidate like that through the weekend. And if you hold sideways like that, it probably will lead to another move lower. So if you do something like that, that's probably just going to drive price down. And this is very, it's very controlled selling. This is not overly emotional yet. It's grinds down, little bounce up, grinds down, little bounce up, grinds down, consolidates, probably another move towards the downside, which can be brutal if you don't have a plan and you haven't done anything about that. So what you would need to see is, in order to look for any kind of a long trade, I would say would be, well, if you do come down and you hit that 88K level, which is one area of interest, it also lines up more or less with the yearly open, and that skew goes very negative. 4, 5, 6, 8, 9%, like anything over 4 really, then you have some confluence. We did see the liquidations tick up. Yes, there was over 1 billion. As of today, the last 24 hours, it slowed down a little bit. You can see over here, the total market cap liquidation has dropped by like 27%. So yeah, there we have it, right? You would need to see price hit 88K, or it is 88K, right? I have to think about that because we were over 100 and now it's like 88. It sounds so low. 88K, you would need to see price hit 88K. You would need to see that long to short ratio skew shift aggressively with more people shorting into support, because that becomes support. You would need to see the long liquidations tick up again over 1 billion, and that might be a worthwhile spot to buy. Remember, you would be buying a downtrend, but you get large bounces. Sometimes the biggest moves that the stock market specifically has ever seen has been bear market relief rallies. So you can make serious money on those bear market relief rallies. We'll see later on today. Come back onto the Whale Trades website after my live show over here and refresh. Just click refresh over there on the site, and you should be able to see what the daily exchange volume is doing. If that's going back towards the downside, it's another bit of a nail in the coffin to suggest that bears are in control. Right now, this has been really, really struggling. And I guess you don't want to see this take out some of these key lows like this $30 billion region. I would expect yet another week of outflows. Saylor has bought the dip again, by the way. We don't know with how much money, but he'll probably announce that on Monday. I saw in an interview that he has bought the dip. So there's that out there. ETH, multiple weeks of negative outflows. We look at this because we look to counter trade the masses, right? The masses are going to be the ETF buyers. These are the new noobs of the cycle. By noobs, I mean newbies. And that is where we tend to find bottoms. So I'm still looking for some of those things to take place. But now, because bulls have taken so long to try and take control, I believe they've run out of time. And I believe that even though we still use the same metrics to look for the long trades that we've been focused on for weeks and months now, this long trade would just be a relief rally that probably leads into a lower high and fails. Unfortunately, that is the reality. Altcoins are relatively cooked. They're getting absolutely obliterated over here. Most of them moving into the weak and neutral territory. Let's see what the flows are doing quickly on the site and just have a look at that. Zcash still experiencing some positive flows over there. Uniswap, TRX, Bitcoin Cash, and MET. I don't know what Metis or something probably. Cool. All right, so we got that there. All of this is for your guys' use. Similar to what I just said on the weekly. Let's go back onto the weekly on Bitcoin over here. If bulls can somehow rally price and close it over $100,000 this week, that would be crazy. That would be a massive recovery, and that would probably be somewhat bullish, especially when you line up with that fear and greed, which has come into that extreme zone, right? That should coincide then with a massive drop-off of the USDT dominance. However, if the weekly closes down here, that is going to be incredibly bearish. And next week is going to get very interesting, where there's a chance that this falls through deeper and you begin to enter into some real form of capitulation. And you need to line that up also with the weekly chart on the USDT dominance, which was at that point, it would be breaking out of that zone. So therefore, the weekly close is super, super important. We already have the CME close, which has been terrible, bad, very bad. Remember, the CME chart trades from Sunday evening to Friday, and then it's closed over the course of the weekend, and that closed terribly. So if that's any sort of an indication as to what comes next, well, there you have it. The good news is that, you don't really need to make any decisions until next week, because if the bulls somehow fight back aggressively and Bitcoin closes higher on spot, there will be a discrepancy between the CME close and the spot close for the weekly, and therefore that will create a CME gap. And we know these gaps have a very high probability of getting filled, right? So that's something to consider over there, which just means you don't have to rush into anything, right? So look, we took a bunch of trades. I think we're absolutely crushing it, nailing it, both on YouTube as well as in Whale Room. Short trade over here on MicroStrategy, 36.33% in the money. That is big, guys. Of course, to short, you have to use leverage, which means the profits are even more than this, much, much, much bigger. I went short as well on gold, right? At this point, I'm already in the money and I can start to eliminate the risk and move it into break even. I've shorted silver, done exactly the same thing, up quite a lot. Those trades were dropped over here in Whale Room, 85% and 16% over there on BTCC. So MicroStrategy also shorted that on my main account. So that's looking super, super good over there. And we're crushing it, right? In Whale Room, we're absolutely nailing it. We have Farouk, who's making daily bread for the community, literally like anywhere between $500 and $2,500 a day, 120 pips banked over there on a gold short trade as well. I'm more going for the swing trade, right? Mine's the swing trade over here. So I'm not looking for the small profits. I'm going to be holding this for quite some time. And the alts are nailed, right? Select 25%. He selected 25 altcoins with the percentage from all-time highs. This is Ignis on Twitter, and this is the result. Internet Computer Protocol is down 99%, or it's 99% away from all-time highs, right? Which means it's down 99%. DOT 95, AVAX 89, NEAR 88, 85, 84, 84, and so the list goes on, right? So things are not looking good in the altcoin sector, and I think you need to be vitally, vitally cautious with your select coins, right? You can let me know in the comments if there's anything in particular that you want charted. ETH is theoretically coming into mid-range, but given the extent of the sell-off, I could see it coming a little bit deeper, possibly to 2,700, and that should elicit a bounce, right? Even if that bounce leads into a lower high, that's a tradable bounce. Well, what happens if it doesn't lead into a lower high and it goes actually to all-time highs? Because it's very rare that we see ETH top out like this. So if history is anything to go by, well, this could be one of the things to actually pay attention to look at. Zcash is up 12% today. That is absolutely unbelievable. And I do still have a very small bag, right? 2,800% up on that trade over there, which is looking good, right? So I do have a small bag over there. I still stick with what I said. When it comes to Zcash, I'm still saying that I believe Zcash will be topped out, completely topped out at some point in December. So if it rallies into new all-time highs now, I still believe that its time is against it and it's running out of time because of the number of weekly candles it's had towards the upside. Essentially you've run for 6 weeks straight. I don't believe this will make it past 9 weeks. So where would 9 weeks take you? 9 weeks would take you into the first or second week of December. And then I believe that this will probably stall out over there, even if it runs a bit higher. Okay. What else? What else have we got over there? Okay. Let's see, guys. 𝗏𝗓, we can have a look at 𝗏𝗓. Actually, you know, our traders have been nailing it in Whale so I'm actually going to rather just pull up Chris's 𝗏𝗓 chart. So Chris is one of our coaches in Whale and that's the trade he's looking at on 𝗏𝗓. I believe he was looking at a rounded bottom on 𝗏𝗓, but up 56%. And I kind of agree with that. So let me just quickly see if I can find where he posted that with the potential rounded bottom on 𝗏𝗓. I saw it in here somewhere in his section. Otherwise, I'll pull up my own chart. Here it is. There we go. I believe here it is. So 𝗏𝗓, looking at a bit of a rounded bottom, I can see something similar possibly taking place on 𝗏𝗓. I have noticed it's, you know, you have to look and consider the sell-off that recently had and what most coins have done. They've come down and taken out their lows, their ultimate lows, whereas 𝗏𝗓 hasn't done that. So I think that's noteworthy. That's something to consider. But again, just crushing it, right? Hyperliquid, short trade on the table, in the money already. Litecoin, long trade over there, in the money straight away, 127%. So guys, I'll let you know, I am kind of opening up an early bird opportunity for you guys to get in because it's first come, first serve. And I know that the guys that watch on the weekend you guys are solid, right? You're most loyal. You're always here. So we're trying to do you guys a favor by giving you first come, first serve, even before the Black Friday things open. This is pre-Black Friday. If you do want to get into Whale Room, there is a waiting list, right? So if you are not within the first 100, you're going to be bumped onto the waiting list. There's a link over here that you have to use the code Black Friday 2025. So you have to go into that, right? Black Friday 2025, you're going to copy that. If you copy that and you come through to this page, you go into the yearly and you say that you want to join. You're not going to get 25% off. You're going to get much more than that. I'm going to leave it up to you. I'll leave it as a surprise. Go through. If you wanted to join, you're getting a significant discount, way more than 25% off. It's the biggest discount that we'll ever do on Whale Room. If you do want to join that, this is a little early bird one for you guys, right? Because there's going to be a waiting list. It's only going to be for the first 100 people. So use the link below. If you get in, you get in. If you don't, you're going to be bumped onto the waiting list because you were late and beyond the first 100 people. Okay, we'll quickly check out some of these. So XRP fighting for its life on this trend line over here. I think it looks heavier than not. It's very, very likely that this will begin to break down. So, you know, pick your poison, right? Pick your poison over here. I think that Solana is still on its way to about $100. I think that SUI has lost a lot of key structure, threatening these lows over here. And this may come back to fill some of this inefficiency properly. That could drop it as low as about $1.23. So I wouldn't step into any long trades over here until such time as you actually see some strength coming back into the market. There is Sonic, and I'm just going on the weeklies because when in doubt, zoom out. I don't think there's any point at looking at like the 5-minute charts and things like that when this is what the trend looks like. Why try and step into a long over here? The trend is just straight down, guys. Straight down. There is say, right? Threatening those lows, threatening to breach those lows. And I think could easily come down to 10 cents, very easily. Cardano, brutal, all the way down. It's going to full retrace. It's probably going to move all the way back to 32 cents. AVAX, brutal, straight sell-off. It's probably going all the way back down to $10 at those lows. TON, flip previous support into resistance. It's just marking down. Horrendous, terrible chart. So look, I don't even want to continue to go through this list and make what sounds like an already bad story worse. So I'll go into 𝗏𝗓 and say that I could see the possibility of this forming, you know, some sort of a cup, right? Rounding out over here. So I think pay attention to 𝗏𝗓. It's maybe one of the coins to watch. That's one of the coins to watch. Other than that, we're sticking with the best trades of the day. That's what we're looking for, at least in Whale Room, right? We're trying to make our daily bread, trading things like commodities, stocks, S&P 500, NASDAQ. Whenever we do take trades, it's just based on risk to reward, and we're simply just executing the trade and moving on. But we're not bag holding anything. And we've said that for months, right? It's not the place to do that. It's too late within the timing cycle. So please do be careful. Arnold says, Carl, please start setting up short bots on Pinex for all coins. We will do that. I will let you know on Pinex as well. We already have the gold trade over there, so you can copy that. It's all linked in the description. We have the BTC trade over here, which I might adjust off of the next bounce. We have the MicroStrategy short trade, which is up beautifully 47% on that trade, right? All of that is linked below. For those of you that, maybe you're saying you're not quite ready to jump into Whale Room yet, you'll give it a few weeks to think about. Remember, there is a wait list, so there's no guarantee you'll get in if it's full. But for those of you that think that, what I would say is go through to Whale School, right? Free education. Join Whale School. All of the lessons are here that shows you how to think the way that I do about the markets, how to read volatility, liquidity cycles, market cycle theory, chart patterns. Remember, chart patterns, just something as simple as that kept us super safe. Looking for this ascending triangle, broke up, right? All of this information is there for you. You do need a Blowfin account to get into Whale School though. And you can spin the wheel. Let's see if I win anything. Let's quickly see. I'm going to spin the wheel over here. Spin the wheel. Will I win anything? Not today. I already tried a few times. I'll have to come back. Okay. So I didn't win today, but maybe you guys can, right? If you want to spin the wheel, there's a link in the description below over there. You can win. If you get the grand prize, it's 1 full Bitcoin, which is insane. We're also giving away a free month in Whale Room, right? For those of you that want a free month, it's over there, right? Okay, cool. Nikhil says, I actually think that we're in a bear market currently. Well, the chances would be very, very, very high that we would be, because if we pull up this chart, remember, this is something we've looked at for quite a long time. And we always said when we approach that day 1,000, as soon as we hit that, we're going to be very careful. We're going to consolidate all of our positions, and we're going to keep our finger on the pulse and get ready to exit if we need to. And that's what happened, right? I do want to remind you the point where things began to truly shift. And if you've been watching the shows, you'd know this. Let's go back onto this chart, was here. And I marked it off actually on this line. I'll put on a dotted line. It was where Bitcoin ran up. We're breaking out to new all-time highs. And if you were watching the shows, I'm just going to move it up a little bit over there to show you. This was the true warning sign. Remember, Bitcoin ran up at that point to a high of 123,740, and that happened on the 13th of August. And therefore, breaking out into new all-time highs is always a very bullish thing, but you expect continuation. So we marked out this candle, and we actually had a look at the 50% level. This was what happened in real time. And this candle started to sell off. And we're like, okay, well, if this is going to be bullish continuation, you do not want to take out that 50% level. That was effectively where I closed pretty much everything on that 50% level, because you could see, well, you start to take out that, you threaten this is going to be a bearish engulfing candle, which it was. And that's it, right? You do not want bearish engulfing candles at all-time highs. And if you're someone new that's here and you want to verify me, go through and look at what I said on the 14th of August. Just pull up my YouTube catalog over here, right? You can go to Crypto Banter. You can go to the playlist. You can go into my section. Where's my section over here for the playlist? There we go. So go to my section over there, and you can go and look, hey, what did I actually say on the 14th of August? Go scroll back over there, and you would have seen that I said this is a massive, massive, massive warning sign. If you're seeing prices getting or prices losing a level, bearish engulfing candle at all-time highs, a trend reversal. And we went down, right? A lot. And we did go up one more time, but it was off incredibly low volume. So it was very hard to trust this pump. And then we went down again. And this is where we're at now. So that's it. That's where we're at. Everything is there for you guys. Use the links in the description below. I do appreciate each and every single one of you. Remember to use the code Black Friday. There is a surprise for how much you get off. You'll only be able to see it if you input that code. I'll see you guys on the next one. Have a good day, and cheers for now.